how to analyze a simple vertical open, high, low, close vertical bar. The open price, which is indicated with this little line to the left, begins a new trading period. The high price, which is the top of the vertical bar, is formed when the selling pressures overpowers the buying pressure. The low price of the bar is formed when the buying pressure overpowers the selling pressure. And the close of the bar, which is this little line to the right of the vertical bar, is the confirmation of price action, and it is the sum total of all the buying and selling pressures within that bar. The function of the close is to confirm the price action. Now, step one when analysing a simple open, high, low, close vertical bar is to look where the close is in relation to the open. The second step, and the most important step, is discovering if the close is closer to the high or low of the bar. This is done by finding the mean of the bar. The mean of the bar is another word for the midpoint of the bar. Calculating the mean of the bar, you add the low price and the high price and you divide by 2. If the close of the bar is below the mean, it is a bearish bar. If it is above the mean, it is a bullish bar. Let us look at an example. In this example, I filled in some prices. On the price, in this example, we're assuming the low price is 100. The high price is 200. Add 100 and 200 together, you get 300. Divide by 2 for the average price, or what we call the mean within price action trading, is 150. That means that if it closes above the mean, it is more bullish than it is bearish. If it closes below the mean, it is more bearish than bullish. In this example, we can see very simply that the close is far closer to the high than it is to the low. That means that this is giving us a greater probability that the next bar that forms should take the high out before it takes the low out of this particular bar that we're analysing. Now, how do we use this information, and what way can we use it to our advantage to take a trading decision from? Well, if you have a bar that closes, and we're assuming this is a daily bar, and we've got a close, number one, it's above the mean. Number two, it's closer to the high than it is to the low. And number three, it is confirmed by the close being above the open. It gives us a greater probability, as I've already said, that the high of the next vertical bar be taken out to the upside before the low is taken to the downside, a far greater chance. Therefore, we can base our trading decisions on the next day's price action, knowing that our greater probabilities are to the upside, initially at least, than they are to the downside. Now, what we will do to give you a real-time example in a real chart is we will now next look at the British pound versus the US dollar, and we will analyze how we look at a single daily vertical bar and how we can implement that information to the next day's trading and how we can take a signal from it. Let us look at that now.
Now we're going to look at another chart here, namely the British pound versus the US dollar. And this particular time period that we're looking at is a daily chart on the 13th of November 2013, as per here. You can see on the 13th of November it closed very bullish, because the close, which is this little tick to the right, was much greater to the high than it was to the low, and was well above the mean. There's no need to even add the high and low in this instance, because you can plainly see with your own eyes that it closed well above the mean. That was indicating for the next day that it should break the high of this bar on the 13th before it should break the low. Now you can see on the 14th, which is the next trading day, it opened a little bit lower. That opens a little bit lower than that close. And it traded within the previous day's trading range before it actually had taken the previous day's high out. Now, with your knowledge of being able to analyse a single vertical bar and on a daily basis, you were saying that the next day's range, you were pretty hopeful and pretty confident based on the probabilities of price action that you were going to actually break to the upside. So let's flick over to a 15-minute chart on the 14th and see what happened. This arrow, the yellow arrow, new trading day on a 15-minute chart, and you can see here this market went sideways until about 10 a.m. in the morning, and you had a large 15-minute bar that was very bearish. Now, remember what you're doing based on the previous day's daily bar. You're looking for buy opportunities. Why are you looking for buy opportunities? Because you had a bullish bar. It hadn't taken out the previous day's high as yet, but the probabilities of it taking out the previous day's high, that is the high of the 13th of November, were much greater than taking out the low. So therefore, instead of, like many a person might have done, went in here and tried to sell the pound against the US dollar, you were looking for opportunities to buy it. Now, of course, there's more to price action than learning a single vertical bar, and something that we will discuss on other presentations. But on our advanced course within Be a Winning Trader, we very much specialize in a vertical bar trading pattern. The vertical bar trading pattern is visible in all time periods, in all vertical bar open, high, low, close charts. But in here you had a higher low than this low, than this low, and you had the market that broke up. And remember, you weren't looking for sells, you were looking for buys. So you're using the previous day's information for the next day's trading by looking for buy opportunities and not sell opportunities. And of course, one of the tricks of the trade within trading price action is higher highs, higher lows, or lower highs and lower lows. In this instance, we had a higher low in an intraday time period, and the market moved up. And what did it do? It went from that low there, which is 159.87, but even taking a signal up round here, which is around 160, the market went up to a high of 161. So there was a potential 70-80 pips of profit within that trade alone, just by knowing the price action of reading the previous daily bar. Please understand this, and it will greatly enhance and greatly help you in being successful and being a winning trader in the markets.
Trading using price action is very much a step-by-step learning process. But I think what would be interesting for you to do now would be to look at, say, a daily time frame open, high, low, close chart on an instrument that you have an interest in trading, and see how you can use the price action of that bar to help make your trading decisions for the next day. Please remember, analysing a single vertical bar is very important, and as I've already stated, is a must-know. But unfortunately, price action is much more than just being able to analyse one bar. I just wish it was that simple. There is much more to learn when trading price action, with the final step being the vertical bar trading pattern. The vertical bar trading pattern is formed in all time frame bar charts. It is not a head and shoulders pattern or a flag pattern. It is a pattern that is easy to see in real time. But here at Be a Winning Trader, we have a unique method in which confirms when a vertical bar top and when a vertical bar bottom is in place. And trading these tops and bottoms within the trend is a very powerful way to trade the markets. It is learning this vertical bar trading pattern that completes one's education to be a winning trader. However, this is way down the line. In our next video, what we are going to do is show you how to trade low volatility and high volatility bars coupled with double tops and bottoms, and the significance that they have on the market when coupled with price action. I'd encourage you to continually go to our website at www.beawinningtrader.com. In there we'll have regular market updates, and we've continued training to make you a success. We're also on facebook.com /be a winning trader. I would like to thank you for listening to this free presentation, and I hope it is the beginning of your process to be a winning trader.